All right, guys, in this video, let's do a dive into what's going on with mortgage interest rates. Let's talk about the mortgage market, the new products that have recently become available, and how all of this is impacting the real estate market. Now, I'm an active mortgage broker with over 20 years of experience. So guys, I eat, breathe, and sleep this stuff, and I'm bringing what I see on a daily basis to you so that you can make an educated decision in your home buying process or refinancing an existing mortgage. All right, so before I dive into this, do me a huge favor, tap that like button and make sure you're a subscriber to the channel so you get more content like this. All right, so let's talk about mortgage rates. If you follow the channel, you'll know that inflation is the enemy of interest rates. And so throughout this year, as inflation has been ticking down, we've actually been seeing mortgage interest rates trend in the right direction, which in my opinion is down, right? Who the hell wants higher rates? So as interest rates have been trending lower, things have been getting better. However, we have super tight inventory. So that's just been bringing more buyers to the market. But recently, over the last month or so, mortgage interest rates have just gotten hammered. In fact, they almost got to the highs that they were at last year. Well, what happened? Well, we had the debt ceiling debate. And this isn't a political channel. I'm not here to pick sides. All the politicians were playing political football with the debt ceiling. And ultimately, what that did for us economically is it hurt the bond market. And mortgages are long-term debt. They're actually bonds, mortgage-backed security. So mortgages tend to trade and follow the treasury bonds. And so what happened when the world thought that, maybe this is the time where the US is finally gonna do this default on the debt? Well, what happened? Bond prices spiked and it made mortgage rates shoot up like a rocket again. And so for a period of time, we were back in the sevens in a lot of scenarios. But since the debt ceiling debate behind us, we've now got that signed into law. We're good for the next 2 years and they'll do this all over again. Come back and watch this video. I guarantee it's gonna happen again. But now we're back to focusing on core economic data that's focused on inflation. Okay, we also have the Fed meeting coming up here. And so everybody's going to be laser focused on what the Fed says for future stuff. Keep in mind, the market pretty much already knows at that point what the Fed is going to do with the interest rate, which, by the way, does not change mortgage interest rates. That's a misconception in our industry that the Fed directly controls mortgage rates. They don't. They have zero control over it. All they can do is impact the bond market, which in turn impacts mortgage interest rates. But everybody will be laser focused on what Jerome Powell has to say about future Fed actions. Everybody's looking for essentially what you want if you want to see mortgage rates come down is that we're in a recession, inflation is coming down, and the Fed is going to pull back from their future rate increases. And who knows, maybe even start dropping or stimulating the economy again, which historically is what they do during recessions. If you look at a chart and look at recessions over the last 4 or 5 decades, and then look at what happens to mortgage interest rates, they always drop during recessions. So everybody's expecting that. We just don't know when it's going to happen. All right, so let's switch gears to the mortgage market. There's been a lot of new products. Everybody's got their shiny objects. Some are good, some are crap. So let's talk about the good ones. Recently there are 2 lenders, and shameless plug, New Way Mortgage, we're a mortgage broker. So we're not captive to one lender. We're signed with dozens of them. And so we have access to both of these products I'm about to tell you about. So feel free to reach out to us if you got questions further. But this product is a 1% down. Now, if you're watching this and you're in one of the high cost states like California, for example, then it's not truly going to be 1% down unless you're buying for $200,000 or so, up to $350,000 basically. Anything above that, and you're essentially getting a grant for $4,000 or $7,000, depending on which program you choose. They both have their pros and cons, so just because one has a higher grant doesn't necessarily make it better, but essentially can get access to up to $4,000 or maybe $7,000 that gets applied to what your down payment would have had to been. So it's a great thing. It's free money. It's a grant, which literally means that as soon as your loan funds, you don't owe anything on it. There's no monthly payments. There's no interest accrued. It's like your dear sweet grandma just gave you 4, maybe 7 G's, and you got to put that down on your property. So that's an awesome thing. If you are eligible for it, I highly recommend recommend you take advantage of it. You cannot exceed 80% of the area median income. If you want to know how to look that up, there's tools for it. Reach out. We'll point you in the right direction. Okay, something else that's really important in this market right now are the temporary buydowns. If you haven't seen them yet, the most popular version is what is called a 2-1 buydown. You'll see 2-1 buydown is how it gets advertised. And essentially what this means is that the seller, not you, the seller is prepaying part of your mortgage payment for the first 2 years. In effect, what it does is it makes your interest rate 2% lower in year 1, 1% lower year 2, and then after that, you have your normal interest rate. Now, the school of thought is that you utilize this to get you through this high interest rate market, get a lower rate for a short period of time, and then boom, you can refinance when rates drop and get a permanently lower rate for the long run. Now, obviously, the future's not guaranteed. However, if what everybody's forecasting comes to fruition at some point, you should have an opportunity to refinance. However, don't buy anything if you can't afford it based off of the temporary rate. That would be foolish. Stick with what you can afford, maybe stretch your budget a little bit, but don't go over your budget and set yourself up for failure potentially, because who knows, maybe we get stuck in this zone for 3 or 4 years. And now you've gone past your 2-1 buydown period and now you can't afford, what you got. So don't do that to yourself. All right, last but not least, with the mortgage market, we are seeing a ton of demand for cash out refinances, which logic would state like, who's going to touch their existing mortgage? Why would they refinance their mortgage if they've got a 2-something% rate? Well, look, what's going on is that consumers, potentially maybe you're one of them, you have a record amount of consumer debt, credit cards, auto loans, student loans, installment loans, all sorts of stuff, right? And at the same time, consumers have record low savings. I mean, basically, once the third stimulus check went out after COVID, savings rates plummeted and spending continued to increase. And so what a lot of people are doing is they're taking advantage of the fact that the average US consumer has over $180,000 in tappable equity, meaning equity that they could access and pay off high interest debt. And so what a lot of people are doing, they're doing these debt consolidation refis, and they're literally saving hundreds, if not thousands of dollars a month by getting rid of all the credit cards and the car loans and all of that stuff and just stuffing it into one mortgage. So if you got questions about that, reach out to us. All right, last thing I want to talk to you guys about is how all of this is impacting the real estate market. Because we talk to buyers all the time. There's this idea, really more like a dream, that home prices are going to plummet, that they're going to drop because interest rates are as high as they are. Who the hell can afford all of this stuff? So prices are going to have to plummet. Well, that's not happening. In fact, prices are going up. Ever since this last February, prices have been going up month over month. And in fact, if you look at CoreLogic, Black Knight, FHFA, Adam Data, Case-Shiller, which is like the gold standard of measuring appreciation, everybody's forecasting anywhere between like 4 to 6% in year-over-year appreciation for this year. So if you're somebody that's been sitting on the sidelines because you're waiting for this crash to happen, for prices to drop, you're going to be waiting forever, buddy. And here's why, is that there is no inventory. Well, why is there no inventory? Well, 70% of homeowners that have a mortgage have a rate of around 2 to 3%. So if you're one of those people, you can't afford to even do a lateral move. If you sell your house and go buy something lesser, you're going to pay more than what you're already paying. So what's happening? People are hunkering down, and that's crimping the inventory in all markets across the country. And so supply and demand, it always takes place. And even though rates are high, what we're seeing is that there's still a ton of demand for houses. In fact, in most markets, 30% or more of listings had multiple offers, meaning that there was more than one party trying to purchase that property. Supply and demand, prices go up, less seller concessions, less price drops. So guys, if you're sitting on the sidelines, you're probably going to be sitting there for a long time. That's why you keep seeing that saying, date the rate, marry the house. What does that mean? Well, with your rate, the idea is that when rates come down, you can always refinance. But when you buy your house, you're locking in your cost basis, you're locking in your property taxes, and your purchase price. That plays a role in how much money you're gonna borrow, which plays a role in what your monthly payment is. So logic would state that you're gonna pay more in the future than you would pay by just biting the bullet, getting in the market now, and becoming a homeowner. Now, if you got questions, you want to talk to my team, we'd love to help you out. Feel free to click the link in the video. You can schedule a no-hassle consultation. It's free to talk to us, and we'll answer all your questions and get you on the road to homeownership. Thanks for watching this video. If you haven't already, make sure to tap that like button and subscribe to the channel so you get more videos like this. See you on the next one.